Let me start with asking you about the news of the hour, and that is the price cap, on Russian crude products that have been imposed by both the EU as well as the G7 countries and Australia. How are you assessing what the implications of that would be, given that we did finally see the pricing as of yesterday?
I think we have already seen the first price cap on crude prices, and we have not seen a major challenge in terms of the availability of oil, and in terms of the markets we didn't see any disruption. But what it meant is that when we look at the Russian oil and gas export revenues, 1 year just before the war and now end of January this year, Russian oil and gas revenues declined by about 30%. It is in terms of gas, in terms of oil, the revenues went down, and this happened without seeing a major disruption in oil and gas markets worldwide.
So you believe price caps, whether it is the price cap on oil or on derivatives, those have been successful in achieving what these nations set out to do?
I think from the nation's point of view, there were, as far as I know, there were two objectives. Still there will be enough oil in the markets, so no supply disruption. And second, Russia's revenues would go down. When I look at the numbers, I think they have reached, at least for now, both of these objectives fully.
I'll talk to you about prices. There are two big demand factors playing out. In the developed world, at least, we're continuing to see concerns around inflation, interest rate hikes. And then there's the China reopening story, which as yet doesn't seem to have had a big impact on oil prices. How are you assessing where prices are headed and what the key influencers will be over the course of the next few months?
There are many uncertainties. As we have been discussing since years, oil markets are always seeing a lot of uncertainties. But in the year 2023, if you ask me to choose the most important uncertainty, it is for me China, both for oil and gas markets, because last year, 2022, Chinese oil and gas consumption, domestic consumption, declined for the first time since 40 years. We have never seen Chinese oil and gas demand decline since 40 years. And if we consider that China is the #1 oil importer of the world, top LNG importer of the world, if Chinese economy rebounds strongly, this will have important implications for the oil and LNG markets, because even current situation, if we see a moderate rebound of Chinese economy, we expect this year about half of the growth in global oil demand will come from China only. But this is a moderate, and maybe as some international financial institutions claim, Chinese economic rebound may be much stronger than expected. This will put some higher upward pressure on the demand side, and therefore on the prices, unless OPEC plus countries take steps to comfort the markets. But the same applies to LNG markets as well.
I'm going to ask you to answer the OPEC question in just a bit. But before that, Mr. Birol, why haven't we seen any feed-in yet of the China recovery process into prices yet? Do you think because it's just too nascent?
It is just starting. For example, before coming here, I look at the jet fuel demand in China. It is going very, very strongly. Very, very strong. If the rebound continues at this pace, we may see definitely upward pressure on the demand side.